Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials down 42, NASDAQ off 13, S&P's off 3.5. Gold contract up $10.40, trading at $1,232 an ounce. Silver up 8 cents at $17.39 an ounce. Platinum up 3 at $1,265 an ounce. Copper flat at $3.05 a pound. Light sweet crude off 28 cents, trading at $85.54 a barrel. Bond market is closed out here today. We had an expansion with volume and price last Friday. Bonds had been up 18 ticks. The 10-year at 127, 30-year 21 at 141.30. King dollar down 381 ticks at 85.65. You get the euro up 50 at 126.78. The yen is down 33, trading at 107.33. Our phone number is 877-927-6648. It was called, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay. Right now, folks, we got down to a price point today of $18.90 on the cash. We're at $19.01, and you're going to have a light volume. Why? Because, of course, we have Columbus Day happening. In fact, the markets, the stock market's about the only financial institution that is opened out here. Not sure why, but bottom line, banks are closed, post office closed, all of the above. Okay, so in that context, there's a couple different things happening. The largest one is that what we have done is we've come into the swing point from the 7th of August with monster volume. That swing point on the SPY is 190.55. We just sliced, diced, blew that baby away. Okay. So last Thursday, Friday, you do volume of 221 million. Today you're at 152, which, by the way, is still a huge amount of volume, especially for like a half-holiday deal inside the S&P. Now, on a weekly basis, it was just a monster. On the weekly basis, what you have is this. The weekly basis, we did 752 million shares going into 592. So what that sets up an SPY down to 173, which is a long way down, which is 16 points down from where we are right now. Okay? Shorter term, what you have, and we'll see whether this rejects the full price as we come into the close here. What you do have is that we're going to have on the NYSE out here today, you're going to have about 700 million shares. We've been doing 920, 950. On the NASDAQ, which has had monster volume, we're going to be doing, let's see, NASDAQ is going to do about 2.2, which is still a lot. We did 2.7 on Friday. Well, what this sets up is this. If we go to the SPY once again, it is setting up that if you get a rejection of price, the SPY would have to close. It doesn't look like it's going to close there at all, but the SPY would have to close at 190.55. Right now, it's not even close to that. Right now, we're at 189.39. So that's saying, guess what? The SPY wants to go lower before it wants to basically bounce. The Dow Industrials, that's down 59. That's coming into the lows that were generated out here of 16,333. That was August 7th also. NASDAQ Composite. What do we have with the Composite? The Composite right now is down 19 bucks. She's at 42.56. Broke the swing points from the August lows with huge volume. And the way the NASDAQ is set up, and this is pretty intense, the NASDAQ is set up is like, okay, this is the half, so longer term, this is a halfway move down of the NASDAQ going into 3,900, which is another 300 bucks down from where we are. The three Qs, the NDX 100, which you have with the NDX 100, that has volume on the way down also, 61 million. You're going into the swing point of 50 million, so that's breaking the swing with volume also. This is a big heads up, folks, because if you're breaking swings with volume, which we are inside those ETF structures on a half holiday, that is a big number. That means that people are moving out, and they're moving out of their equities very quickly. Gold contract. We go into gold. We take a look at gold. What we have with gold is this. That's building cause for higher price. We're up 1040 right now. You did 109,000 shares contracts thus far. Gold has rejected lower price, did it with lighter volume, came off that level, building some cause up here. Where once gold gets inside 1241, which it's only $9, guess what? You'll see this baby take off pretty quickly. What I expect you're going to see here is that, first off, it's going to run the 1241 area. That's the larger range. You get inside that, you're going to end up seeing it build some more cause to get up that 1347. Now, silver is a different animal. But silver's highly volatile, and silver can basically get the juice. It hasn't got the juice yet. Silver's only done 26,000 contracts. It has a huge amount of work to do to get back inside 1870. It did come off the bottom, and now it's got to prove itself. And thus far, it hasn't proved itself. What will happen is that inside, well, let's go to the oil market next, CLX4. So we're going to take a look at the oil market. What we have with the oil market, oil is trading flat. It got the low today of 84.07. We're at 85.56. And the A to B equals C to D on this baby, folks. The first one was $85. The next one is down to $80. I expect you're going to see, well, it could just do multiple ABC structures on the way down. The 94, that's another $12 A to B. So if this does another $12 A to B, we might be looking at $72 oil, which would be really amazing. It's not as amazing, though. I can tell you, what is really intriguing here is that you had technically that it wanted to go down. Fundamentally, what the trade here is, folks, my take on it anyway, is that what you had 2 weeks ago, Saudi Arabia came into Asia and reduced their oil products right across the continent. And they did that without talking with anyone else in their OPEC organization. Last night, Sunday night, they did the same in Europe. This is this is about two different things. There's a high supply, of course, in the United States, because we're getting so much oil. But this is breaking Putin. That's what this whole thing's going to be. I suspect there's some kind of deal that we did with the Saudis. Bottom line, this is the quickest way to break them down in about 2 seconds flat. You're broke, you have no money, guess what? You can't have any wars. That's just how it goes. King Dollar. We go take a look at King Dollar. What we have with King Dollar is this. King Dollar right now trading out at down 400 ticks. King Dollar backed off the high, did it with volume. So what that sets up, folks, that sets up a larger correction in King Dollar now. And this is going to give the middle market a little breathing room. And the expansion was tremendous. You know, went from 79.90 all the way up to 87. Back down, as you back down, last Thursday we had some juice down there at 85.01. You went higher with lighter volume. That's setting a small ABC down inside a larger ABC up. Okay, so it's going to be pretty cool watching this shake out. Because the way King Dollar is right now, King Dollar can back into 82.95 and have absolutely nothing wrong on the longer term that it wants to go higher. On the shorter term, what I expect that will do is that's going to give the metal markets room to breathe. That's how that's set up. Some of the high volume stocks today in a low volume market. You have CSX. They're talking about someone wants to either take them over, they want to take someone else over. The airlines are getting absolutely smoked. You get Delta down at 235. If we go look at Delta, folks, it's pretty amazing. No, there's no doubt. You know, you get oil pulling back, but I suspect this is, well, what this is technically first. Technically, these have taken out their highs. They've had light volume. Delta has had light volume since September of 2013. That price point that Delta's going to, we're at 30.59. It's 23.13. It's come down, blowing its brains out with volume on the way down. American Airlines, we take a look at American. Same type of setup in American. American, well, 1 second. No, that's the wrong. And American's now $2, not 2 pennies. It's not Alcoa. 1 second. There she is. Okay, so American's down 10% also with volume. The way American is set up, we're, oh, that's right. American with BK again. Oh, my God, this is sick. So American's back. Got it. You're 28. American's going to go after its IPO price after the bankruptcy, which I think is about $23. You stay right there, folks. Tom O'Brien, TFNN. We'll come right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You get the Dow down 78, NASDAQ off 25, S&Ps are off 8.5, and as we do each and every Monday at 20 past the first hour, let's go over to our man, Mr. Basil Chapman. Basil, folks, of course, has a great show right here at TFNN every trading day, 11 to 12 Eastern Standard Time. You can also get his newsletter by coming over to our website at TFNN, going to newsletters, trading newsletters, see the opening call right there. And, of course, don't forget, every trading day at TFNN, 8 o'clock in the morning to 6 o'clock in the evening, we do live programming. We replay that program and get it all right on your cell phone at tfnn.mobi. If you'd like to get Tiger TV, just go to tfnn.com, hit the TV on the right-hand side. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day?
Very good, thank you.
Yeah, all you guys in Boston. Everyone's off today except the stock market. What a trip that is, huh?
I know the bank, the post office, very quiet. School, Newton, the school's closed, so it's very quiet.
Yeah, you know, that's how you get schools off. Our schools aren't closed down here. It's funny how this is a weird holiday, man. I mean, how they close and don't close. So it looks like we're looking at the Dow Industrials out here, right?
We're looking at the Dow as we always do at this time. So what I'm looking at is the Dow, and I spoke to you about in the Chapman Wave methodology. What you do is you try to identify the most obvious lowest low bar. If you look at the Dow daily chart, that's the 7th of August at 16,333. And then what you really want to do is you want to count each successively higher peak, and you want to go to at least a peak D. It can go higher. Peak D is the objective. It's for the buy mode to be completed. So what we saw here is that it went to a D at 17,161 on the 4th of September, pulled back, held that maroon line, that's the 9-period exponential moving average, and then it spiked up to leg E at 17,350 on the 19th of September. I call that a Chapman Wave right arm extension. Why? Because the stochastic wasn't confirming the move that was represented by the MACD, and it also gave you this particular candle, which is a very interesting candle in that if after this doji type candle, it's a little bit like an evening star, you see that there's a strong down move, that becomes the start of what could potentially be a sell signal. So I'm going to just jump for a second to the S&P, because we not only went short the Dow, we went short the S&P by going long the inverted, the 300% short position. That's the SPXS at, I think it was 2557, 2503, I think was the low, the all-time low. So we got on the 22nd of the very next day to have the confirmation of peak E, which is also there in the S&P. And what happened was we went short, and we've held that short position. Yes, on Friday at the opening, we did take a half a position off. So we've still got a half a position. We still short the Dow. And one of the things that I've been trying to emphasize to subscribers of my opening call is that there's a psychological change that we've got to observe right now. And that is, on the way up, every single opportunity was a buying opportunity. The mentality, and it was so hard to do, the mentality was that even if the Dow jumped up 150 points, you could still buy it because it was going to go higher. Now you have to invert that. You have to completely change your thinking, because as far as I'm concerned, on Friday we got a confirmation in the Dow, the S&P, the New York Stock Exchange, and the QQQ series, that's the NASDAQ 100, that the weekly charts had made a sell mode confirmation. So to me, that says that you've got time and price to the downside. Rallies should fail, and your psychology has to change. Not only that, on Friday we saw that the semiconductor index just got smacked, and that dragged down the IBB, which is the NASDAQ Biotech ETF. So we had actually been long the SOXS, which is the 300% long the 300% short the semiconductor index, had taken profits. Unfortunately, it was a pity because it actually went up 50% from our entry level. We didn't get anything like that, but we have been short via these other instruments. And I'd also spoken to you about, so the weekly chart tells me that now we've got to look at the monthly chart because it's leg D. As I said to you before, D is where you've got to be very cognizant of a turn that could recycle higher, but this is where you can get your deepest and longest downturns. So far, the MACD, the month is halfway through. I really can't talk about it other than to say that at this point right now, the price of the S&P and the Dow are underneath the 9-period moving average. The MACD has turned down. The stochastic is still very strong in the 90% area for the S&P. So I can only go one step at a time, and that is to say the daily has gone from a sell signal to a sell mode. The weekly has now confirmed the sell mode. And this is a more An international, I think it's an international statement. You know, I'd spoken to you about Marriott Hotels International, which we've been short also almost from the exact top. That hasn't changed. Let me just get that over here. Marriott. So Marriott is trading right now at 62.47. We went short the day before the top because of the 120-minute chart, which had just given us a signal, and that was confirmed the next day when Marriott went to 73.28, about a point higher than our short position, which we still have. Today we took off half the position at the open at 63, so that's a 9.8, almost a 9-point gain. But the point I'm making here is that Marriott Hotels has been really a very good economic barometer international. It's almost like copper in a way. It's everywhere, all around the world, and it's saying that the daily chart has dropped very, very sharply in a very short period of time. The weekly chart has made its top from 73.28 to today's low of in the 61 area, and that's just in 4 weeks from the high, and it took a much longer time to get up there. So that's telling us that there's momentum, and the monthly chart very much looks like it's going to be a peak E, but the technicals are still quite good, so we've got to look at this later in the month. But in the meantime, back at the ranch, this is saying on a shorter-term situation, short-to intermediate-term situation, if something like Marriott, which has really been, in a way, a market leader, is starting to decline, we've got to respect that through the rotational, whereas before on the upside, we're always looking at rotations holding the market up in a narrow range before it started up again. We've got to be careful here that we might be seeing the same kind of rotational aspect now that the semiconductors and the biotechs have joined in the sell signal to sell mode, because the consolidations, or the bounces in this case, could be quite short-lived as we go to lower lows and lower highs. I'm very cautious, and we'll see how things go. Even the volatility index is not giving back any. If you look at the VIX index going back to Friday was the first time that the volatility index, let me just get it over here.
Well, Basil, let me ask you something. You say the rotational aspect. I mean, you're saying that there's not a sector that's safe, right?
At this particular point, now we've started to see that even the very best sectors are starting to come down. So I believe that there aren't many safe sectors. We do see the utilities, the safety area. We've also seen some of the cyclical stocks, the defensive type stocks holding well. That really represents money going. As far as I can see, money's going. Oh, look at bonds. Bonds are closed today. Well, first of all, let me finish. The VIX index is running in leg C in the weekly. But yes, defensive stocks are holding well. And we're looking at the volatility index starting to rally, even in the weekly chart.
Listen, folks, you can check out Basil tomorrow morning at 11 o'clock. You can check his newsletter out, TFNN.com, right under newsletters. Basil, have a great night, safe night. We look forward to the show tomorrow.
Thank you very much, Tom. You too.
Come right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 126. You get NASDAQ off 36. S&Ps are off 14. And if we go over to the S&Ps and just take a look at this for a second, because what you have, folks, is that when these trap doors open, man, do they open quick, fast and furious. And that's just what you had intraday here. Someone hit this and hit it really good. So picture, you have a half holiday here. Bottom line is that the S&Ps just went from 1885 to 1873 in a heartbeat. And that reason has to do with the amount of contracts that got hit. Big contracts. And as one of the Tigers said in the den, is that, yeah, they're looking for stops underneath there. They are looking for stops, and what they got, folks, is they got stops underneath there. But what that does, bottom line, is it sets up another ABC structure on the way down, because you broke the B point, broke it with volume intraday in a huge way. So your A point on this one is 1924, and your B is 1880. Oh, man, it's huge. So 44 bucks. You see it up here is 1904, so you're talking 1860. 1860, A to B equals C to D. You know, and that's the smaller equation out of this. Bottom line, folks, get your stops in, period. If you're long and strong, and you have been long and strong for 2, 3, 4 years, whatever that is, just get your stops in. Because, as I said last week, this is, you know, you have the February 5th benchmark. That's one thing. The February 5th benchmark is nothing compared to what this wants to do, folks, okay? This little baby right now broke everything. I mean everything, going all the way down to 1380 to 1340 in the S&P. And you're at 1890 right now. Your benchmark on the February level is 1798. Okay, now it's only 100 points. It seemed like a long time, a long way away, but we're already off 120 points in the high. Now it's only 100 points away. That's the small issue. The larger issue, this came off the high with volume, with acceleration, with all of the above. People haven't been used to a correction, number one. There's probably people in the market that never seen a correction, number two. And bottom line is that the selling is intense, and it's going to get heavier. You know, that's on your S&P. You take a look at the XLE, and if you want to see just that was making its way down there, the XLE made it. Okay, the XLE, oil, gas, the whole ball of wax. Your benchmark, so first off, the XLE was at 101 in June, 101. The benchmark for the XLE, the high of the benchmark from February was 84.17. The low was 81.75. So what happens is this. So picture, you know, that's down 20% from the high. So when we're at the high, you know, yeah, at least even when I say it, it's insane. Oh, this is where it wants to go. Why? Because it's a high volume low. That's where it wants to go, right? Well, we're down 20% now. But now you're down 20%, and you're down 20% with monster volume. So what does that mean? Today, we're at 81.38. We went to 81.16. The XLE, folks, is taking apart the swing point and with monster volume. We came down last week with 171 million versus 98 million. There's not enough room to get out. What that sets up for the XLE is that's going to set up, let me put this on a monthly basis when you see how intense this is, because this is intense, I'm telling you. And I've seen how these oil stocks like to trade in past corrections, and they're vicious. I remember the correction in 96. The correction in 96 took oil stocks into the single digits. Now, they were the first to come down. They were the first to go back up, too, but it took them down beyond belief. So we're at 81 right now. The XLE wants to run to 72. So get another 10 points down. Give it 5 days, maybe 3 days, okay? And we'll see whether it holds that. If you don't hold the 72 area, then forget it. Then you're getting down to the 54 area. If we come into that area with the type of volume that we had last week, it won't hold it. Now, what you also have, and this is where the case can be made, is that when the XLE had taken out its highs of 2007, which we did in April of this year, you took them out with dramatically lighter volume. Watch this correlation. So we got over the highs on a monthly basis with 236 million versus 850 million. Can't bust them up, you bust them down. You get a false break topside. When you get a false break topside, technically, the way the read goes is that you're going to go all the way back down the other side. Now, this really gets sick, because all the way down the other side gets you a 38. I don't expect we'll get to 30. Well, what you can get to very easily is 63. What's that? Another 19 points down on the XLE. You take a look at the XLF. What you have in the XLF is this. XLF right now, we're 2246. These are all the financials, of course. The financials thus far really haven't broken. What they have done on a very subtle basis, though, is you had a wicked expansion of volume last week. We expanded to 294 million, going into 210. The February 5th benchmark in the XLF is 2131. We're at 2250. You know, and what you do have in the XLF is this. There's folks that are basically saying that banks are going to go up dramatically. There's folks that are saying that the fine structure inside the banking area because of the housing deal is basically over. And the housing part of it is over, folks. But you know what's not over? What is hanging out there in a huge way is the currency manipulation, the LIBOR deal. Our banks are involved in that LIBOR deal. That LIBOR deal, folks, is bigger than the fraud, the mortgage fraud that was out there, that the banks basically just paid billions and billions of dollars so they wouldn't have to admit that they were into mortgage fraud. The currency deal is like, it's probably, I have no idea how many times bigger it is, but it is bigger. It affects every single one of us out here. The reason being is that the LIBOR rate, there's many folks, thousands, hundreds of thousands of folks that had mortgages that are based on a LIBOR rate. Just, you know, so this thing's not, for the banks, that's not even close to being over. You know, we'll see where the rest of it shakes out, but it's not even close. 877-927-6648. Apple continues to hang at these highs. Apple closed a penny over the benchmark, which is 100.72 last week. I suspect what that's all about, you know, this thing was going to fall apart in spades. But what you do have is you have Apple buying back their stock. They're spending, I'm sure, a fortune up there trying to stabilize it. It's only going to be a matter of when this thing cracks. And when it cracks, folks, you are going to see some heavy destruction in the NASDAQ. You got to figure something. You know, last week when the NASDAQ got smoked, that was without Apple, okay? That is, like, unbelievable, okay? That was without Apple, okay? So it's like, and it was really without the IBB. The IBB is starting to crack right now. This was subtle out here today. The IBB, which is the biotech index, that's down at $4 today, 258 with volume. You know, so the expansion on the way down is coming. It's coming very quickly. If you do go over, and what is going to be facing now, see, this is what you also have here is this. So check this out. One of the Tigers is saying, you know, what just hit the market? And I just basically put in there, well, the trapdoor opened again. Because that's how these markets go. The trapdoor opens again. Fundamentally, what I suspect you have here is this. And this is something that when you have funds or you're running money, you know that what happens on this holiday here, folks, is that there are plenty of money managers that don't come to work. The ones that are in work said, you know what, I got to get out before everyone else comes back. And that's what's going on right now. They're getting out, man, and they're not waiting, okay, until tomorrow and the next day. Okay, so this is where it's one of those deals that, guess what, I got to get out. I want to get out right here, right now. And, you know, it makes a big difference. What you will have happen simultaneously is that, as our man Dave White had been talking about for quite a while, is that the amount of margin has never been so high. What you have, no doubt, okay, is you're going to have calls that are coming out left and right. You know, thus far, when you take a look at the S&P, what you have in the matter of 4 weeks is that you just gave back to May of 2014. So what are we? We're in October, you know, which, you know, that's quite a bit. Now, that's only in the S&P. You take a look at some of the sectors, then you're talking a whole different ballgame. And that expands the amount of calls that are out there and the amount of people that basically, you know, very, very well have to come up with more bread or they have to sell. You know, when we go back to the XLE is back to April of 2011. And it did that, folks. So check this out. The XLE did that in 3 months. Yeah. So what is that? April of 2011, April of 2012, April of 2013, April of 2014. That's 3 years. They took 3 years and 3 months. That's what you call a down market, folks. You stay right there. We're coming right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. You get the Dow down 179, Nasdaq's off 53, S&Ps are off 21. And the way this baby's set up right now, folks, this last break is going to get you a structure that will bring you down into that February 5th time frame. We broke that baby. We broke it with some juice. If we go over to the SPX, if I use the cash S&P right now, we just show you this. So what you have with the cash S&P right now is that we're at 1880. And just on a fast, down, dirty price projection, what you do is you take the last swing point out here, which is a 1904. You take your high out here, which is the 2019, and you break it with conviction, which we did out here today. That sets up a 1730 level. 1730 level, when we bring this back to the February 5th time frame, what you're going to see out here, let me bring it back 2 years on a weekly. What you're going to see out here, the high of that February 5th level is 1798, the low is 1737. So this baby is heading there. If it heads there like ExxonMobil and the XLE head there, which I expect you're probably going to get. So when you talk sectors and you talk probability, it's important to remember that one sector is telling you what the market wants to do, particularly large multinational sectors, okay? So in that context, the way that the XLE hit it, it wants to go a lot lower. The break that we actually had on the S&P is saying 1340 S&P. Bottom line, just get your stops in. You know, as you come over to TFNN, folks, what you're going to see, and you may have heard the commercial a few times, about the Tiger Real Estate First Mortgage Program. If you are looking for a secured investment with a monthly payout, you can go to the front page of TFNN and you're going to see under breaking news. The way the first mortgage, I put together about a 10-minute video so you can see how this works. You'll see the actual documents that you receive from the Tiger Real Estate Opportunity Fund. The way the program works is this. When you get over there, after you listen to the video, you can go to the Tiger Real Estate Opportunity Fund. The banner's on the right-hand side. And what you'll see is this. We're paying, it's a 4-year mortgage, 5% paid annually, and it's paid on a monthly basis. Your investment is secured by the real estate. The loan to value for the real estate is 70% of the appraised value. If you are interested in a 4-year program, you don't need the cash for 4 years. You're interested in a monthly income that's secure. Check it out on the front page of TFNN. You can check out the video, then go to the actual site. The fund pays all the closing costs, the title search, the lien search, the recording fees, tax stamps, title insurance, all of the above. It's a great program if you don't want to be in the market, or if you are in the CD market, or if you have cash that is not in use that you do not need for 4 years. That's the part that you absolutely want to wrap your head around. Yes, it is an ugly close, folks. Bottom line right now, you get the Dow Industrials off 224, and this is vicious. This is actually vicious. The Dow, when we started the program, the Dow was at the top of the swing point from August. Right now, it's sliced and diced this thing like nothing. Like nothing. I mean, like paper. It just took it out. The low there was 16,333. We're at 16,326. The NASDAQ Composite actually, so inside the Dow Industrials, if we look at the Dow right now, inside the Dow Industrials, what you have, there's not one stock that is green. The ones that are leading it down are Merck, Disney, American Express, and Pfizer. The least one down is Visa, and that's down 58 cents. Inside the NDX 100, what you have is that you have a few of them. The NDX 100 is down 58 points, but you do have some of them that are up. Expedia is down 442. You get Tesla off 1297. Applied Materials is down 92, and you get AMAT off Western Digital off $4. There's big numbers here. Let's see what, I suspect we got an expansion of volume. Right now you're at 711 million, so that's going to be about 800 million on the NYSE, which certainly is an expansion of volume coming into the close. We take a look at the NASDAQ. The NASDAQ is pushing, we're already at 2.2 billion, so the NASDAQ's pushing volume also. This is absolutely one of these questions that everyone's trying to get out at the exact same time. And, that always turns into a mess, folks. What you will see tomorrow when this bond market, actually the bond market will open tomorrow morning. When this bond market opens up, you're going to see something that's going to be extraordinary. Right now, the 10-year, I believe, is at, okay, so the 10-year is at 127.09. This is going to be running to 130. It's going to be a 130 in about a heartbeat. That's intense. The 10-year rate is 2.2. So we're going to probably see, folks, tomorrow, the 10-year at 2. And I suspect it's going to get lower than that. You're going to see rates go down dramatically, bonds go up dramatically, because this is going to be kind of ugly, going right across the continent. And it's going to be ugly for quite a while. What you do have, I was just looking at, I heard, on CNBC saying, okay, the S&P is under the 200-day moving average. And just if you want to, not that I don't use moving averages, but if you want to look at something, this is pretty incredible. The S&P has not been under the 200-day moving average since November of 2012. So that's pretty intense in itself. And, as I was bringing up last week, this is a break with conviction. A break with conviction that's wide price spread, accelerated volume, tunes up trouble in a huge way. And what we still have, no matter what station you listen to this morning, is everyone was saying buy, 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 okay? And all that does is that, yes, people were correct in the past on that deal, but what you do have here, until you hear people crying, okay, that is not even going to be close to coming into bounces or lows. In fact, if I look at the arms right now, it's not even high. People aren't even nervous. See, and what you have here is this. This is a situation today. Well, they got nervous on the tick. The tick was minus 1495, but you don't have it on the trend. You don't have it. This is basically some big operators that are getting out fast and furious before the workforce comes back tomorrow. When that workforce comes back tomorrow, you better hope that your financial advisor was getting you out, because bottom line is that it's a different ball game here. Dow Industrial's down 223, Nasdaq off 61, S&P's off 26. You stay right there, folks. We'll come right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night and a great week, folks. This quote is by Norman Vincent Pearl. Never talk defeat. Use words like hope, belief, faith, and victory. Market-wise, let's take a look at it out here. We had the Dow Industrials closed down 223, Nasdaq off 62, S&P's off 25, and that, folks, is on a half holiday. That is a 1.3% downdraft in the Dow, 1.6 in the Nasdaq, and 1.4 in the S&P and the Nasdaq. Gold contract up $12.20, trading at $1,234 an ounce. Now, what you have with gold is this. Gold had rejected lower price, did it with lighter volume, came off that low, had some strength, has some strength. It's building cause to get back inside the 1241 area. And what the difference is between the markets, S&P, and the metals market, this time versus in 2007, is that both of the S&Ps, Dow, Nasdaq, gold, silver, they were all at highs. What I expect you to see this time is that the market basically confirmed it out here last week, confirmed it out here today, took a swing point, took it apart like in spades. The S&P right now is at 1877. That's already off 120 points. That's high. That baby's going to be running into 1730 in about a heartbeat. Difference? Gold going up, markets going down. Silver. Silver needs some more action out here. Silver does need wide price spread accelerated volume, which it had one day. We'll see whether we can get it. Silver can get it. Silver's highly volatile, where silver's at 17.45. Silver has to get up a whole nother dollar, 18.45. Gold is already in its higher range. Gold rejected its lower price. It'll have to go inside 12.41 to be in its higher range. It gets inside 12.41, you're going to see an expansion in a big way. Oil's at 85. Oil looks like it's doing another B to C of an ABC structure on the way down, probably to $80. Could even go to $75. Big number. Now, the bond market was closed. The 10-year and the 30-year had gone topside once again last Friday. Did it with wide price spread, accelerated volume, has the juice behind the move. Bonds want to go a lot higher, meaning price goes higher, rates go lower in a dramatic way. I suspect what you're going to see out here tomorrow when the bond market opens. Right now, the 10-year's at 2.2. I expect you're going to see 2 in about a heartbeat. It's going a lot lower. That's going to bring mortgage rates down. If you're looking to get mortgages, folks, refinancing, go start your work right now. The avalanche that's going to come in that business in approximately 2 to 3 weeks is going to be amazing. Because last week you could get a 30-year at 3.95, okay? And don't go to banks to get them, folks. I've been pricing a lot of these for some of the buyers that we have for some of this real estate. And the bottom line is that it seems that the banks are still running at about 4.2, somewhere around there. You got to hunt real quickly. I mean, one of the targets told me that on the Capital One Bank site, it had 3.95 last week. 3.9 is out there, and it's out there from all over the place. What I expect you're going to see out here in a couple of weeks, you're going to see about a 3.7, 3.6. And do your calculation of what you got now. King dollar. What did King dollar do? King dollar back down 500 ticks out here with 85.52. And what did you? Credit unions. Yes, credit unions. Great, Jim. Thank you. Credit unions out there, too. King dollar back down 506 ticks. They're at 85.52. King dollar is going to have a larger correction. The reason being is that King dollar had gone up dramatically, comes off those highs, has some juice. DX, let's go look at it. Has some juice as it comes off the high. Looks like it's going to do an ABC structure on the way down now. You got to remember, King dollar had gone straight up from April 79 to 87, 86.90 or something. Yeah, 86, 87. Then comes off that level. Last Thursday, gets down with juice, bounces with lighter volume. What that sets up is that sets up back to 82.97. And what that will do, that'll give the metals market some room to breathe. What I expect you're going to see out here, folks, is this, is that when King dollar wants to go a lot higher, King dollar more than likely, well, here, let's look at it here. So we'll set up this is a much longer term setup as to what I think King dollar is going to do and the gold market's going to do. So King dollar, if we take this and we put this on a 10-year monthly, what you have is that King dollar has come into the last swing points, the first one being 2008. That swing point is 89.20. The second one was 88. It's come into that area, folks, with force. Now, what it's done, and this is what is crucial to wrap your head around, it didn't hit the high of either one of those. It came right up to it. It's backed off. It's going to build cause. Now, as that does that, and this will take 5-6 months or something because of how it trading, meaning building cause is a huge deal to break highs or break lows. So if we build cause even for 3 months, what you're going to have is a much larger ABC structure on the way up. You're going to have a 10-point ABC structure on the way up, and even if you back off to that 83 level, that's going to bring you to 93, and 93 is over the high of 2005. Never mind the highs of 2008 and 2010. It'll basically take them out in a heartbeat. Now, if that's what you get, what you'll end up with is this. You'll end up with a structure that if you can actually take out this 89 over the course of the next 5, 6, 7, 8 years, guess what? You're going to go to 121. That's how that'll set up. That's in the dollar. What will happen in gold? Now, what I expect would happen in gold is this, is that just like this, as the dollar backs off and builds cause, gold will keep building, building, building. Every time the dollar takes an expansion up again, gold gets hit, pulls back. The dollar is going to go up. Let's say the dollar goes up 5%. Gold incrementally will probably gain 2, 3, 4%. They'll both go up. The reason gold's going to be going up, folks, is gold's going up as a currency. That's the bottom line. Currencies right around the world are toast, absolutely toast. Everyone wants in the dollar. The euro's toast, the yuan's toast, the yen is toast, the South American currencies are toast. Gold is not toast. And what you do have is that the aspect, now watch how this works, 'cause this is important to understand. You know, you hear a lot about China and, you know, the aspect that they buy a lot of gold, they're opening exchanges and all of the above. And that's true, folks. But the biggest thing you want to wrap your head around is this. So check this out. They're the largest producers of gold right now. They're also one of the largest consumers with India. What the difference is this. As they import, and they're one of the largest importers of gold. As they import gold, okay, that puts a demand on the price of gold, right? But guess what? You can't export gold. China does not let gold out of the country. So think about that every single time. You only can import it. So once it's there, guess what? That is the demand inside that formula that you really want to wrap your head around. Because what has happened is that they just opened a exchange in Shanghai. They'd open another one in Hong Kong. Hong Kong's open too. The bottom line is that the larger picture is just that. It's the demand versus supply, and that is going to do what? What it's going to do specifically is bring down the amount of supply that's available. And then the other bummer, and this is a real bummer, this is a bummer right across the board for all of us, is Ebola. Ebola, folks, okay, you know, we were talking about it last week when the CDC was out here, bottom line, saying, don't worry about anything. Yeah, sure, don't worry about anything. You know, the nurse, basically, that was taking care of him, has Ebola right now. You know, the bottom line, when you have a bureaucrat saying, don't worry about anything, folks, bottom line, you better start worrying in a big way. Because think about how many other things they tell you to worry about, and they're shaking down little old women at airports, okay? It's a joke, okay? And you get the gist of it. But the gist of it, of Ebola inside the metals market, is huge. The reason being is that West Africa has the most amount of gold that is not tapped. South Africa in general, okay, has still the most amount of gold in the world. And those miners, okay, are dispersed across Africa. They go to the mines to work. It's a problem. So what that adds up to me is what? Is less supply. It's all about volume, folks. It's supply versus demand. Dow Industrials closed down 223. Nasdaq off 62. S&P's off, where are we at? Down 28. Gold's up 1280. Stay right there, folks. So come right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. We go over to GoPro. GoPro, came off that high. And some action on the way down. GoPro right now is down $8, over 10% today. That's after hitting a high of $96. And what you do have is that the first leg down, that was the day that J.P. Morgan had let some of the insiders basically sell shares prior to the original lockup, and that was a scam in itself because, the bottom line is that they did it in the aspect of making a nonprofit foundation. The bottom line, folks, a nonprofit foundation is still power in extraordinary ways. There's no two ways about it. The owners control the nonprofit, do with the money what they want with it, push the money into certain deals, and all those. And I can't say all those nonprofits, but nonprofits in general. There's banks of bread that can be used as a nonprofit in order to get business other ways. Bottom line is that this baby went down with some juice behind it. Some of the high volume stocks that did go down with juice, the airlines are the biggest hit. Delta, American, in both cases, they want dramatically lower price. Now, they had gone up on a lot lighter volume. They're coming down with huge volume. Delta did 41 million shares today. It was down $2. We take a look at the Delta. We bring this back. put it on basically a 3-year setup, and what you have is that what's screaming out here for Delta is $23, and right now you're at $30.90. And if you come into that $30 and $23, and you come into that with volume, you're going to see that stock a lot lower. We go take a look at American Airlines. American was down 9%. That was down 220 out here today at 28.58. And what you do have out here with American, we did 34 million shares, huge expansion. And the expansion with volume out here today, folks, for half a holiday is pretty intense. What you have with American, now, American had already gone BK. They only came back out, I believe, in December of 2013. Well, American's going right back into that area, which I think that's what it did. One second, let me see something. Yeah, it did. You know, so American is going all the way back to this $25 area, and we're at that 28. And what you do have happening, there's no doubt, you know, we're talking with Basil Chapman the last hour, and Marriott. Marriott was coming down hard. He has a subscriber shot Marriott, has since that high up there. What you have is that there's going to be, people are going to be thinking a bit, well, here. Marriott's at 61 and wants to go to 42. You know, that's, you know, it had gone up on lighter volume. You know, your first stop, you'll get a little support of 56 or something, but bottom line is a lot lower prices. And you know what? When you look at the context of getting on a plane or going into large areas, there's a problem. You know, there's particularly a problem when you look at the aspect of the airlines. Why? Because planes move around a bit. You know, the CDC is saying at one point that, yeah, you know, this is Ebola's a deal that has to be, that's not airborne. But then what you do, that you do have the fact that, you know, what does that mean? What does not airborne mean? Does that mean that if you sneeze, that you get the juice from the sneeze on you? Is that airborne or not airborne? If you cough, is that airborne or not airborne when someone's spitting out like that? And I suspect everyone wants to live for a while is going to be basically turning around and looking around. You know, I said to Nico this morning, you know, if you haven't heard Nico and Page's show, he's a great show. It's on every Friday. But I work out with Nico just about every morning. And I says, man, I really understand now, you know, why some people don't shake hands. You know, because, like, this one's a life or death one. This is like, hold it, this is like serious business. Let's go to our man, John in New Brunswick. Hey, John, how you been?
Hey, Tom, how are you doing, buddy?
I'm doing great, man. It's great to hear from you.
Well, thank you. We'll be headed down south pretty soon.
Oh, that's good. That's real good.
I didn't make it over to see you folks, but I will when I come down this year.
I'm glad you're coming down, man. You know?
Thank you. Yeah.
So how's everything been going?
That's been going good, Tom.
So,
it's fine. It's cool up here. We've had a pretty cold summer, but, you know, the nights have been cool here. And
okay.
Then we had a big windstorm back that knocked a lot of trees out all the way through New Brunswick. That came up the East Coast.
Right.
We haven't had that for a long time. I think that probably made national news.
Yeah. Now, let me ask you something, John. How long is it since your wife has passed away?
3 years.
Wow, 3 years.
Yeah, 2011.
Man.
In August. Well, it was 3 years on August the 1st of 2011, Tom.
Okay. Boy.
Beautiful woman, eh?
There's no doubt, man. And I know, you know, it's going to be so tough because you guys were together. Well, of course, you're still together, okay? But
yeah.
How long were you physically together?
47 years.
Wow.
Yeah,
okay.
47 years. We married in 64.
Wow.
Yeah.
Okay.
And she passed away in 2011.
Boy, that's hard to believe. It's still 3 years.
Yeah.
I mean, I'm sure it's not for you, but, you know, this time goes so quick. It blows my mind, man, you know?
Absolutely. Hey, we had a lot of fun at the gold shows. Remember?
Yeah, listen, I remember it well. I remember it so well, you know?
New York, San Francisco.
Yeah, no doubt. That big smile of hers, I know. I love it.
Absolutely.
And so let me ask you something. How, you know, when something like that happens, and you've been together so long,
yeah.
I mean, are you coming out of it? How does this work?
I come out of it okay. Yeah,
Good.
I come out of it because I do a lot. I just get myself busy. I have a lot of friends.
Yeah.
And a lot of support, and it's just been wonderful, the support that I've had amongst people and the help from family and everyone else.
That's
and
good.
I think it is probably very, very difficult if you don't have that.
Yes. Right.
But when you do have that, that makes the difference.
And then you probably can feel her with you, her energy, right? Can you?
Oh yeah,
Cool.
yeah.
Okay.
She never let up, Tom.
Good. That's good. That's good. That's good. Well, listen, man, I appreciate you, calling and answering that because, it's so intriguing as life goes on. Do you know what I mean? It's like, how does this work,
Yes, absolutely. I had dated a lot of co-eds in college. I think I was going into fifth year of forestry, and she was in grade 12, and someone asked me some night, we were just out with a group of kids on a date, and someone said, how would you like to go out with a beautiful woman?
Yeah.
And then I found out who she was, and so there was another guy I had to cut out, though.
Perfect. Hey, there's nothing wrong with that. Hey.
No. He treated her sort of mean. So her mother didn't like him too much.
That's a good start. That's good.
Absolutely. Yeah, absolutely. Well, it was interesting, Tom. Can you look at a graph on uranium, or give me an idea, uranium and nickel, on what your analysis is of them?
Let's do this. How about I look at CCJ, which is Cameco, okay? So Cameco is the largest uranium company in the world, right?
Yeah, okay.
And, I had liked what this looked like, and then I actually got stopped out. Right now it's at 1588, and I would stay away from this for right now, because what it wants to do is go test its lows of 2008.
Okay.
So that's $12, and let's see what it does when it gets down there. It's coming down there with lighter volume, John, but it wants to get down there.
That's the uranium. Now, how about the nickel?
Hey, you stay right there. We'll be right back, all right?
Okay, thanks, Tom.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish down 223, NASDAQ off 62, S&P's off 29. And as we do each and every Monday at 20 past the second hour, we have our man, Mr. Chad Coco. Chad, folks, does the best option show on the planet. It's right here at TFNN every Tuesday, 12 to 1 Eastern Standard Time. Now, all the programming at TFNN, folks, you can get right on your cell phone. TFNN.mobi gives you the full audio. We go from live 8 o'clock in the morning to 6 o'clock in the evening. Chad's show is on 12 to 1. It's sponsored by TD Ameritrade Think or Swim. And if you haven't test drove the Think or Swim platform yet, folks, come over to our website at TFNN. You're going to see the banner on the top and on the side. You can hit that banner, bring up the account. They'll let you trade with paper money. I use this account each and every trading day, whether you're trading options, futures, commodities, or equities. It's on one platform, folks. It's fast, it's furious, it's stable, it's all of the above. Chad Coco, what's going on?
How's it going?
Man, oh man, you talk about the VIX, right?
Yeah, huge move up today, huh?
It's pretty amazing, man, particularly because, like, you and I are working and the market's working, but it's almost like a half holiday, but you wouldn't know that by looking at the market, right?
Yeah, really. It kind of took off all this morning.
Yeah, there's no doubt. Now, you know, when we go back and look at the VIX, folks, okay, this is the highest the VIX has been outside of the downdraft in 2011. No, yeah, June of 2012. We get up to 27, but it looks like this baby is going to challenge that, number one, and we'll see whether it gets up to the August level, which was the last time we really had a downdraft in the market. It's pretty amazing how, you know, you forget how fast and furious the VIX can go, right?
It really is, yeah. So I was just watching the market and taking a look at some of the trades that are going through.
Yes.
We're seeing a ridiculous number of puts being bought on the spiders, let alone the SPX. But the 2.5 million puts were purchased or traded on the spiders today alone.
Really?
A massive amount of volume there.
That's amazing, man. And, you know, what is intriguing here is that I happen to be on the air from 3 to 4 Eastern time also. And, with a couple of people that were wondering, like, what just happened with this trap door?
Yeah, we're doing the same thing. Is all of a sudden, just boom, just fell right down.
Yeah, and you can see. I think when these large operators, Chad, when they want to get out, a nice way to get out is that you put on the put position first, and then you unload your shares, right?
Mm-hmm.
I mean, because what happens there, folks, is that the put position gets on, the market makers will try to go delta neutral, and, if they want to be alive at the end of the day, right, they're going to be delta neutral. But then what ends up happening as the operator or the fund manager sells those shares into the marketplace, guess what? You have an expansion of the way down. The position that they already had put on gets in the money pretty quickly, and, as you see that trade unfold.
Yeah, adds insult to injury to the market.
You know what? It does do that, but it's a pretty trade.
Get on their side.
it's a pretty trade, folks, whether it's up or down. When you see those large trades go like that, it's a pretty trade, okay?
Yeah, and the best thing is for us to try to do the same thing.
There's no doubt. There is no doubt about it, which is, in this particular case, we're talking about a dynamic that's totally different than the last 3-4 years, right?
It really is, yeah. So we're seeing the market's reached its top. Is it time to look at more non-directional type trades, or perhaps play the downside a little bit?
Yeah. When I was looking at this, they were talking about the 200-day all day long today, and the bottom line, this is the first time the 200-day broke in like 2.5 years.
Yeah.
That's pretty incredible, right?
Fun times.
Yeah. So when you're in a market like this, particularly, I guess you want to, you don't want to let it settle down, because you want to, if the volatility is going up so high, that means your premiums are going up dramatically, right?
Mm-hmm. Yeah, so if you're trying to put on long positions now, you're probably paying a little bit too much in the premium. So
yeah,
try to do some debit spreads.
Okay.
Limit your risk and collect some premium on those.
Yeah.
I'm sorry, credit spreads myself.
Credits. Okay, all right. Because this is where it's really going to get, I guess we get earnings that are coming out, that are starting to come out. The oil and gas sector, you talk about getting smoked. That thing is just like toasted, right?
Yeah, I was paying attention to that too. Yeah, it's lowest it's been in, 6 months at least? No,
yeah, it actually gave back, the XLE, it looks that we've given back almost 2.5 years and 3 months.
Yeah.
Yeah, I mean, so you're talking some heavy damage here. Yeah, the XLE is out here trading, no, not that long, May of 2013. But that in itself is pretty dramatic.
Still a pretty big run, yeah.
So when you look at the, I know, because you have so many accounts at Thinkorswim, when you're looking at that retail investor, what are they looking at?
We're seeing a lot more options trading than we've seen ever before, really. So we're expecting this options expiration to be our heaviest options. Overall, just people protecting their positions.
Yeah.
Learning a little bit more how to use options to take advantage of that.
That's so cool, man. It's so cool in the context of how you have trained so many investors over the course of years, retail investors, with strategies that folks can actually protect themselves in some type of a downdraft like this, when in fact they may want to stay in the market for years, right?
Right. Yeah. So we're not telling you not to trade. We're just showing you how to trade smarter.
Yeah, which is so cool. Listen, folks, the program every Tuesday right here, 12 to 1 Eastern Standard Time. And no matter where you are, folks, okay, just hit your phone, TFNN.mobi. You can hear it. If you're one of those investors that want to stay long and strong for, long periods of time, 4, 5, 6, 7, 8 years, whatever that is, bottom line, learn strategies that can protect. What happens is this is important to understand too, folks. It's not that you're going to protect everything, but you're going to protect a certain percentage of your portfolio. And your only downside of that is that you don't get an upside. But if it's interesting, Chad, if anyone, just an investor in general, say, okay, I know that I can't lose more than this. Let's say something was worth $100 and I want to be protected down to 80 or 70 or 90, whatever. It's really cool if the investor understands that, okay, I don't get an upside, but guess what? Under a certain level, I don't have any more pain either. And I'm still in my position if that's what they choose to be,
Right. It's like Moneyball in baseball. So we're not looking for the home run every time. We're looking for a bunch of base hits.
Yeah. There's no doubt. And they're much easier to get, folks. Particularly, in life, they're much easier to get. In the option market, they're much easier to get. That's just the way it goes. You know, the home runs are actually probably 5 times harder than a real home run, right? You know, it's interesting how it works.
They're few and far between, and I rarely even try to go for those. I'm trying to go just a bunch of small little hits.
Yeah, it's great advice, man. Hey, listen, you have a great night, safe night. We look forward to the show tomorrow.
Have a good one.
Okay, man. Have a great one. Have a safe one. And that's at 12 noon tomorrow, folks, 12 to 1 Eastern Standard Time. We're going back to John from New Brunswick, and we were just talking about uranium. And now we're going to get into the nickel market. Now, John, I don't have a chart on nickel, okay? If I bring up VALE, Valley, Valley right now Valley has a lot more than nickel, okay? Valley is one of the biggest iron ore producers, magnesium, they get gold, nickel, copper, aluminum. Now, the way that is set up, it looks to me like this has a decent bottom in, you know. So I don't know if that helps you in the context of just nickel in general. Did you have a certain stock, maybe?
I was looking at let's look at Falconbridge. You could look at Falconbridge. That would be in the nickel belt in Sudbury, Ontario. That's the largest nickel area, I think, in the world. And then you remember Boise Bay.
Yes. Now, do you know that symbol by any chance?
International Nickel.
FL? No.
Is a die. It's one of the big ones on the Toronto Stock Exchange. Or Falconbridge.
Okay, one second. Let me see if I can get this. Falconbridge.
I'm in one of the smaller ones, so I hesitate to give it to you there.
Let me have it anyway. I can look at it. Falconbridge.
Falconbridge, yeah.
Yeah, I can't pull it quick enough. I'm sorry, man. What I will do, thank you. Oh, that's interesting. Falconbridge is owned by Valley. Okay. So what's going, okay, so let's just stay with Valley then. The bottom line.
Sure.
So, I mean,
that's great. Yeah, go with Valley. It's owned by Falconbridge.
So what happens there is, so we're at 1147.
Yes.
We put this on a week. Let's put this on a 10-year monthly first. Okay, so on a 10-year monthly, what we did is this. It got into the lows of 2008, which was 972. We hit 1060. Okay, so last month we had 580 million versus 1.5 billion. So that's decent. Okay. So now what you want to see, it looks to me like this baby's bottom. That's what it really comes down to.
Yeah.
And so this one here would be a buy like back at 1102. And it's going to have to build some cars. It's going to need, it's going to need a lot of juice to go forward. Let me, JJN, what's that? A couple of the targets gave me a couple more to look at. Okay, iPath, nickel, Bloomberg nickel. Interesting.
Bloomberg nickel would be a good one, Tom.
Yeah, you stay right there. This one's just a quick break. We're going to be right back. We got John from New Brunswick, folks. We want to hear from you. Our phone number is 877-927-6648. You stay right there, folks. We'll come right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We had the Dow finish down 223. NASDAQ is off 62. S&Ps are off 28. We're talking with John from New Brunswick, and we're talking about the nickel market, folks, and we're using the JJN. The JJN is the iPath Bloomberg Nickel sub-index exchange-traded note, and what this would, what is inside this is that is the actual future market. So, John, if we look at this right now, this is at 21.95, and the way that this is set up is that you have a high-volume high out here at 29, which is nice. On the monthly basis, it looks to me like this came off the bottom. Yeah, last year. So we came off the bottom of like 12. No, come off the bottom of 17. We do a nice expansion up to 29. You pull back with lighter volume. I'd say that nickel's probably bottomed. That, you know, what you have here is that this will start moving up to the 2470 area. So what that would be saying is that would be saying nickel has bottomed. Because what I'm reading here, what I'm reading that what is inside this index is 98 point, yeah, no, it's saying that it's 100% nickel futures. So if that's what this index is, the bottom line, that's saying that nickel wants to go higher, man. Okay, John? Thanks, man. Appreciate it. Have a great one, man. Have a safe one. I must have lost him, I guess. Okay, so market-wise here, folks, this is what you have. You have a downdraft with huge volume. You broke the swing point of August. You broke it with conviction. I mean, big time, too. We're at 1874. The benchmark that we've been talking about for a long time, the February 5th benchmark, is at, just put this, 1730, I believe it's 1730. So the low is 1737. That's where we're going right now. Yeah, well, listen, you can bounce in between it, but you're basically going there. The larger issue has to do with this. The larger issue, and this is something you absolutely should wrap your head around if you're in this market and you don't take stops and all of the above. The larger issue is that my take on this right now is we're going to 1343. That's a monster, folks. You're talking about a market that's 40% off its highs. So that's the way it's set up. And what will also give us a clue is the XLE. The XLE came down off the highs. It's already down 20%. You're at the benchmark from February 5th, and it basically sliced it and diced it, folks, okay? We come into the benchmark with 171 million versus 98 million. The bottom of the benchmark is 81.75, and it took it out. You're at 80.97. So that's saying that the XLE is working its way down to 65. 65 will get you back to 2012. And that's on the smaller picture. The larger picture, yeah, no, that's the larger picture too. 63. If the XLE gets below 63, let me tell you something, then it's monster trouble, because that means you go right to the very bottom. And where I'm going with the 63, by the way, is the highs of the lows of October of 2008. Because we had so much volume there, it's going to be basically hard to basically crack into that area. But if it ever comes into that area, like it basically was trading out here the last 2 months, it would do it in a heartbeat. Just to give you an idea of how much the XLE actually gave back. The XLE, folks, in 2 months gave back from March of 2011. That's about as intense as you can get. So it's a big number, it's a big give back, and it was fast and it was furious. As you're over at TFNN, now don't forget, at TFNN, folks, we program 10 hours of live trading, live content every day, every trading day. You can get all that program right on your cell phone at tfnn.mobi. You can also watch Tiger TV. Now, what Tiger TV is that you get the charts, you get the audio plus the video. You can get that right on your cell phone at TFNN. As you're over there, what you will see right on the front page is that introducing the all-new eSignal 12.0. eSignal, folks, is a great data source. If you're looking for a data source, TFNN is embedded inside the new 12.0 platform on eSignal. So check that out when you get a chance. You can test drive it absolutely free. Then also under breaking news, what you're going to see is that if you're looking to get a secured investment that's paying on a monthly basis, the Tiger Real Estate Opportunity Fund, the first mortgage program, would be a program that you may want to look at. The way that program works is that it's a 4-year term program. You get the first mortgage on one of our properties. It's not a pooled investment. We pay, well, the loan to ratio is 70% of the value. Third-party appraisal. Bottom line is that you're being the bank. We're cutting out everywhere in the middle. You have the real estate. You'd be the bank. Instead of making 1% or 0.5% in a CD, you're making 5%. It's secured. It's 5% annual, paid monthly. You know, so just to give you an idea, $100,000 gets paid $416 monthly. As you're over there, you can hit the video first, look at the video, then hit the Tiger Real Estate Opportunity Fund. You'll see some of our portfolio there. We have more houses, and there'll be more up there tomorrow because a few of those are actually already taken right now. But you can check it out. All the documents are also there so you can understand exactly what you receive at that closing. At the Tiger Fund, we pay all the expenses. So you don't have any expenses, meaning the title insurance, the title search, the taxes, the stamp taxes, that is, all of the above. So it's a flat-out, pure 5% annual interest. This being Columbus Day, what you do have, which is really unusual, is this, is we have an expansion with volume, fast price destruction. That is telling me, number one, that the door is not big enough for everyone to get out, folks. That's what you have happening here. There's plenty of advisors that are on vacation today. You know, you have a 3-day holiday. It's not a 3-day holiday in the marketplace. What you are going to see tomorrow, more than likely, is more price destruction. Very fast, furious price destruction. Why? I expect what you had out here today is that advisors, operators that were working, they had the MO knowing that, listen, there's enough people that are not out, they're going to come back and they're going to be selling. I got to get out before they're going to get out. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking it right back here tomorrow. Go get them, folks.